Hey, Danny Ray with PinnacleQuote Life Insurance Specialist. Just want to touch base with you. It's November 1st, okay, about 8 o'clock at night on a Wednesday. Just want to go ahead and discuss how life insurance rates vary by age. Pretty important topic. A lot of clients don't know why prices are what they are, and they don't know why certain things affect the price. Okay, so I'm going to go a little bit over that. First and foremost, anyone that wants to continue the care for their family, okay, after they are gone, should be getting life insurance. Bottom line, if you got kids and you're the primary breadwinner, it's an absolute irresponsibility. It's absolutely irresponsible not to have a life insurance policy to make sure your family's protected. And then again, it's never too early. You never know what may happen tomorrow. I mean, every morning, a husband or a wife gets up, hugs their spouse, kisses their kids, and leaves. Don't come home. Happens at all ages. Look at the obituary columns in your local paper. It happens. All right, so it's very, very important to make sure you protect your family. Okay, and again, the younger you are, the more cost effective it is. Okay, because without life insurance, your family could not have the necessary finances to pay bills, debts, mortgages, your funeral in some cases. And again, if you're 35 and you're starting out in life, you don't got earmarked 15 grand sitting in your bank account earmarked for somebody else's funeral, or even your own at that age, right? All right, so many people wonder which age they should get life insurance. And again, the younger the better. There's no better time than now. Procrastination is the killer of time, okay? The longer you wait to get life insurance, the more money you're throwing in the fireplace, okay? The difference in price between a $500,000 40-year-old male, okay, that's completely healthy, okay? It's probably a $30 bucks, $35 a month. Okay, a 50-year-old male for the same policy and the same health is $85 a month. So that's procrastination is only going to cost you money. Okay, now a term policy is the most basic kind of life insurance that you can get. Okay, it will simply provide, death benefits. Coverage is temporary, usually 5, 10, 15, 20, 25, or 30-year terms. There are 35-year terms available. Okay, again, a term policy is the best chance to get cheap life insurance, most affordable, cost-effective life insurance regardless of age. Okay, a permanent life insurance policy will have more options, more flexibility than a term life insurance policy, and will cover you for your entire life. So remember, the insurance company is going to know that sooner or later they're going to have to cut a check as long as you make your premiums. So on a whole life policy or a permanent life insurance policy, the premiums tend to be a lot higher because of the fact of that reason is they know they have to cut a check one day. Okay, statistics are not in their favor. All right. Now, again, with that said, permanent life insurance policies, some whole life policies, obtain cash value, builds up cash value. Okay, not a big selling point in my eyes because cash value, if you ever borrow from it, they charge you interest on your own money. That's just a fact. And most times, the interest that they earn on some of these policies don't offset the inflation. Okay, so again, you're paying for something that you think you're getting a return when just every year you keep it, inflation's eating it away at 3%. Okay, then of course, if you're having trouble getting accepted because of certain health issues or whatever the case, could be smoking, there are also guaranteed accepted life insurance policies that are a little more expensive than your average price, and usually the face amount's a little limited. Okay, and again, so with that being said, what I want to do is discuss what you need to know about life insurance policy prices and rates. Okay, there are a few very important questions, okay, you need to answer before starting to apply for life insurance. Okay, one is, how much life insurance do you need to get? That's really important. Okay, the old saying is, you can't hit a target blindfolded, right? So I mean, you really want to go ahead and make sure you have the absolute. I don't want to say exact, but you want to have it so when your family dies. This is the way I look at life insurance, and I said it in a few videos ago. If you have a 3-year-old child, okay, and you make 50 grand a year, all right, what happens if you die tomorrow? I mean, you got 17 years until that child's going to graduate college, 18 years, 20 years probably. So you need $1 million policy, because if you die any time in the next 15, 20 years, you want to make sure that child's taken care of. Okay, so you really want to look at that. I keep it very simple. I'm not going to discuss mortgages and college tuition and everything else because your paycheck pays for that. So I discuss multiples of income. I keep it real simple. It's how many a year, what's your youngest child's age, how much you make a year, and let's get him to his cap and gown, and if lucky enough, closer to your retirement. All right, try to knock off two birds with one stone. All right, so that's really, really important. So with that said, multiples of income is how I do things. A lot of agents will keep you on the phone for 40 minutes and talk about everything under the sun. Okay, but I keep it real simple. I get you application off the phone 15 minutes and you don't know everything. Okay, again, I keep it very, very simple. Okay, it should be. It's life insurance. Also, your budget. You don't want to get a policy if you're going to lapse the policy one day. So you want to make sure you can something you can afford. I rather have a client. That's the difference between me and a lot of agents too. Okay, I rather have a client buy right at the right price, knowing that their coverage is going to last, than go ahead and try to squeeze the premiums out of them so I make more money. And they'll risk it, because again, life happens, financial cycles. 7 years from now, you might be on a downside, and just financially, that's what happens. It just happens sometimes. So you want to make sure that you budget right. Okay, I'll be talking about layered policies, one of my favorite strategies where it saves you a boatload of money in upcoming videos, where it enables you to put tens of thousands of dollars back in your pocket. So stay tuned for that video. I think you're going to be very excited. Okay. Also, you want to compare life insurance companies. Very important. Here at PinnacleQuote, we only do business with AA+ rated carriers, the creams of the crop, the best of the best. All right, so we go ahead and we fit you with the right carrier. We're not going to just throw something off the rack and one size fits all. We're going to tailor make you a policy that is going to be built around who you are and what your family's needs are, and with a game plan and a strategy. That's really important. Okay, so we go ahead and do that. Comparing life insurance companies, we do that for you. Click of a button, I can get prices to over 50 carriers and get you the best deal with the best carrier, hands down. You cannot find a better rate than what I can get you. Okay, you just won't. You might be able to match it, but you won't be able to find it. So you can exhaust your time to realize that you're wasting your time. Okay. Also, focus on getting healthier. If you're moving up in age, you're thinking about life insurance, and your health is a little off, you're a little bit overweight, do something about it. Okay. You lose some weight, eat healthier. Okay. Get a right amount of sleep. Stop smoking cigarettes. Cigarettes will affect your rate considerably. Just to give you an idea. Okay. $500,000 policy, a 40-year-old male. All right. 20-year level term, non-smoker, $30 a month. If you're smoking, it's $150. So you get $30 to $150 on a 20-year level term. Do the math. Okay, that's about $115 more a month, right? 20 years. Let's do the math. So if you smoke cigarettes, this is what you're paying for. Okay, if you're smoking cigarettes, this is what you're paying for. You're paying an extra $27,600. Okay, over the course of 20 years. Okay, it's a lot of money. Okay, then on top of that, you're spending another $2,000 on cigarettes every year. So you're at almost $70,000. Okay, $70,000 if you smoke cigarettes. All right, so stop smoking. Put the cigarettes down. It's not doing you any good anyway. That's a college tuition for a few kids. All right, and now as far as rates by age, I want us to discuss that. Okay, that's really important. Okay. Not surprisingly, the older you are, like I said before, just going to be a little bit, I'm going to reiterate this a little bit so it sinks in. All right, the more expensive, the older you are, the more expensive life insurance will be. Life insurance companies have different rates per age. Okay, another reason is that's another great reason to compare life insurance companies, because they all have different rates. Again, here at PinnacleQuote, we do that for you. It takes all the work out of it. We do all the work for you. Okay, we've pioneered the way that we do this. Okay. All right. Make sure you're working with reliable companies. Okay. I have 15 companies that are my go-to companies. Okay. For pretty much almost every ailment. The other 3 or 4 dozen is specific companies that if you have certain ailments like cancer or certain cancers, so on and so forth. Again, whatever your needs are, whatever your profile is, whatever your health impairment is, I have a carrier that specializes in it. Okay. So again, the longer you wait, the more expensive it's going to be. All right, so let's look at 20s. If you're in your 20s, expect life insurance to be very, very cheap. I mean, literally cheap, okay? For somebody that's in their 20s, let's just say 25 years old, all right, if somebody's 25 years old and gets a $500,000 policy for 20 years, okay, you're looking at, again, this is a very healthy male, okay? You're looking at under $20 a month, okay, for a 20-year-old. All right, so you spend more money on a latte at Starbucks a few days a week for the month. Okay, so again, it's only $20 a month to cover you for 20 years for $500,000 at age 25. All right, so again, most of the time when I write people under the age of 30, it's a non-med. Again, rates for non-meds are usually sometimes better priced than the term policies. Okay, really, really important. All right, now if you're in your 30s, let's just say you're 35, that same policy that you're going to get for less than $20 a month at age 35, again, not much changes in that 10 years. The same policy going to be at $22. All right, so again, if you hit 30, between 25 and 35 is only a couple of bucks. Okay, so again, in your 30s you'll be more financially stable than you are in your 20s. The family just starting out. For many people in their 30s, they have a mortgage at that point in time, young kids, so on and so forth. Now, in your 40s, that same policy for when you're in your 40s, let's just say 45. Okay, same policy, that's $22. Big difference now from age 35 to 45. That same policy is now $54. Okay, so again, once you hit your 40s, most people have a lot of assets, or beginning again, you're flowing. Okay, that you need to maintain. So you have a lot of assets you need to maintain, maybe equity in your house, more income. Okay, the 50s are closing in. So which that's when life insurance really starts to really increase in price. That's when most people get health issues. Okay, such as diabetes. All right, so you definitely want to make sure you get into a policy in your 40s before retire. So then gear up for retirement. Now again, same policy in your 50s. Let's say 55. Okay, remember it starts to get a little drastically more expensive. That same policy that you're going to be paying $19 a month in your 20s when you're 25, $22 a month in 35. $55 a month when you're 45. That same policy now at 55 is $135. Again, that's if you're in perfect health. Okay. Now again, at this age, in your 50s, your children may be out of the house, graduating school, college. Your house is probably halfway through the mortgage, if not almost paid off. You may want to look at your rates. Is going to be more expensive. So at this time is usually when you want to gear up. Do you want to extend the term? Do you want to replace this policy? I don't need this much, and go out a little bit longer. In your 50s is usually the best time to do that. And again, when you're in your 50s, when you're 65 for the same policy, okay, you're going to be paying for the same policy. You're paying $135 for at age 55. For $500,000, 20-year level term at age 65 in perfect health, you're at $462. So, again, in your 60s, you're probably not going to need that much. But at this point in time, if you're my client when you're 35, I would have had you do a 30-year term, and you would have been skating into retirement with all that money put back in your pocket over the last 2-3 decades. All right. So remember, when you're in your 60s, you really need final expense. Your house is paid for. Your family, your kids are out of the house. There's really not much that you need to protect. All right. Now, at this point, maybe 5 times your income to protect your spouse, because maybe that spouse relies on you financially. And you want to have peace of mind if you would have passed away that they're taken care of. Usually at that age, that's what it's mostly about. It's not that you need the money, it's because you just want to have peace of mind to know that the person that you've been married to or loved for the last 3-4 decades is going to be okay. All right. Now, again, for seniors, age 70 and above, again, I won't get into what the price would be. I'll entertain you, though. So if you were age 42, you probably wouldn't be able to get a 20-year term at that age. Even just a 10-year term for $500,000 at age 75, all right, you'll be at $750. Now remember, mortality age for us guys is 77. For women, it's 81. So whenever you have a term that overlaps that age, the price is going to shoot up for you because, again, statistics say that the insurance company's going to have to write a check. Okay, so they'll make you pay for it. All right, so for seniors, I just made a video not too long ago. You can check my blog. I have an article about seniors over 70. But for seniors, with modern medicine, people are living a lot longer, as we know. Okay, even seniors need to renew their life insurance policies in some cases. Okay, so insurance companies are beginning to understand this and making more policies available at that age. So that's pretty much in a nutshell about prices on age. All right, again, the prices increase drastically, especially at the age of 40. Every decade. So you just want to have something locked in and put that money back. You guys work hard for your money, so you want to make sure you have something locked in and put that money back in your pocket where it belongs. Okay, so with that said, again, my name is Danny Ray, PinnacleQuote. If you have any questions, don't hesitate to give me a call, 855-380-3300, extension 2. Also, you can visit us on the web at PinnacleQuote.com. You can InstaQuote directly online. You can also schedule time to speak to me. I'll do a policy review. And again, I won't try to sell you. I'll just explain the options to you. Make sure you're in the best policy. Especially if you're over age 40, you want to make sure that you got the best policy available. Okay, for you and your family. So I wish you guys the best. If you have any questions, give me a buzz, and make it a great day.